Hello, hello, hello. Good afternoon and welcome to the Altius Research Market Recap. Today we're going to talk about the bounce in the stock market. We're going to cover Iran and then we're going to go over some of the Middle East oil routes for people who don't know much about that. I'll give you a breakdown and show you on the map where the oil goes through and what the situation looks like currently. Okay, so obviously there was a big bounce in the averages today, and let's start with the sector performance breakdown. So tech, like IT, got the big bounce today, up over 4%. And everything kind of followed that. Financials were up a lot too, but you could see that energy and utilities were down, which makes sense. So we could look a little bit more granular here at the stock heat map. So you can see the market tends to follow Nvidia and big tech generally. So Nvidia had a huge day, so then tech followed that, and then tech was up a lot. Broadcom, you can see, was up like 5.5%, Google over 5%, and Meta had a huge day, 6.5%. But Meta's been one of the weakest stocks over the last couple of weeks. And then you can see here in energy, Exxon, Chevron, these are some of the biggest losers in energy today. And the reason that these ones went, the reason that energy was down is because they think that there could be a resolution in the with the Iran war. So that would have a negative effect on oil prices, which would directly affect the future expected profitability of some of these countries, especially anticipating that some of the destruction in the Middle East could stop, and then they could start to rebuild their facilities and get their production back online. So yeah, today was a complete reversal of the trends that have taken place over the last couple weeks. Um, so yeah, everything up today except energy. Energy down, complete reversal off the lows today. Let's get into let's go into the charts a little bit. Or actually, let's start with some of the news. So, a couple of the headlines from today that moved the market were obviously all about Iran again. So, the first one was that Trump reportedly told aides that he might be okay with ceasing military operations in Iran, even if the strait remains closed. I mean, I think that's a ridiculous headline and purely meant to just bounce the market, which it did. Um, I don't think there's any way we're going to leave there while the strait is closed. That headline made no sense, but the market wanted to hear it, and it did bounce on that. But then what really brought it to the next level was when Iran's president said that Iran is ready to end the war with the United States, but wants guarantees. So that's what really sent the market higher because it shows that Iran is willing to make a deal. But the key caveat there is that they want guarantees. And I think the sticking point is that we don't want to provide those guarantees unless we could get a certain level of regime change and get our guy in there, basically. And that just hasn't materialized yet. So I don't think we're out of the woods yet with this situation. That doesn't mean the bottom's not in on some of these markets, but I think we're going to have some more turmoil yet to come. So there were a couple other headlines, one of which is the U.S. will leave Iran in 2 to 3 weeks. So I think that actually provides some clarity and furthers what I was just saying, because if Trump is coming out and saying we're going to leave Iran in 2 to 3 weeks, then we're obviously not done yet with what we're trying to do there. Then another headline was that the USS George H.W. Bush and its accompanying warships are deploying to the Middle East, joining the USS Abraham Lincoln and the USS Gerald Ford carrier strike groups already in the region. So we're still loading up military equipment there. So what it looks like to me is that I think we're entering sort of like the second act of this conflict. And I think we're going to see, and I did notice last night we bombed, I think, I forget which city, Isfahan or something like that, but we bombed what seems to be a major weapons depot there. So I think that actually eliminated a good percentage of Iran's missile program. It doesn't mean that's the only storage facility that they had. But I think what they're trying to do is from the air eliminate as much of their missile capacity as they possibly can. So like I said, I think we're entering like the second act here, where we're going to see heavy bombing of specific targets, specifically to take away their missile program, as much as possible so that if we wanted to pass tankers through the strait, that they wouldn't be under as much of a threat. It's just different though in modern warfare where you have drones and low cost military equipment where it really doesn't take much to cause a lot of damage, especially when you're dealing with something like oil tankers that can explode fairly easily, right? Um, so yeah, I think we're gearing up for something, and then you have to keep in mind that the markets are closed on Friday. So if they wanted to do something, the long weekend is probably an attractive time to do it. Like you could start Thursday night and maybe hopefully be done with whatever you're trying to do by Monday morning. So I would put this weekend as a like a high percentage chance that we escalate over the weekend, especially because we got this bounce in the market. So that sort of gives Trump more leeway to escalate the situation. I mean, traditionally, what makes Trump back off is when we're looking at the U.S. 10-year chart here. So this is the 10-year yield, and what gets Trump to back off is when the yield starts spiking, because that makes the debt more expensive. I mean, it's a very uh, complicated thing to try to explain, so I won't get too in depth with it. But yeah, when yields are spiking, that's when Trump typically starts his taco. So this is the daily chart here. So as you can see, a couple days ago, when we got up to almost 4.5% on the 10-year, that was the highest level going back all the way to July of 25. So you can see at that point, that's when he started to get a little bit concerned. Um, and then it's not surprising then that when you see yields spiking, that he comes out and issues that statement, like where he said he told aides he might be okay with ceasing military operations. Like that's just a nonsense headline. But the effect of that is that it gets the 10-year to back off, and calms the market a little bit. So yeah, I don't think we're out of the woods. I think if anything, this move down in the 10-year could just give him a little bit of leeway to continue. Sorry, here to continue with the military campaign. And I think this weekend is probably the key weekend for him to do it. Especially given his timeline where he said 2 to 3 weeks. So I mean, I would take him at his word for that. I mean, if he's saying, I will say though, if he's saying 2 to 3 weeks, he probably wants to get it done quicker than that, so then he can make it seem like he's ahead of schedule on it, right? So that's sort of what I would be looking for in the short term for the Iran situation, but it just doesn't feel like we're quite at a resolution yet. I mean, both sides are clearly willing to deal, but I mean, the other side of it is when you've got the Iranian president coming out and saying that they're ready to end the war. I mean, maybe Trump and his military advisors will look at this as a sign of weakness and then think that now's the time to press to really get what we want out of the situation. Um, so yeah, so looking at the 10-year here, you can see we came off the highs of a couple days ago, but we're still elevated. Like we're still over 4.3%. I mean, that's still very high. Um, so that's bond yields. Let's look at the Nasdaq. So yeah, you can see here on the daily chart, we got a huge bounce off the lows when that news came out this morning. So we went from five. So this is from Monday. The lows were at 555, and now we're all the way back to 577, and we perfectly touched the 9-day moving average. That's that green line right there. Um, it's funny how that works. People think that people dismiss technical analysis, but the reality of it is that so many people follow technical analysis that it sort of creates like this reinforcing feedback loop on it, where things like this, it's just not, it was not surprising to me that we made it all the way to the 9 moving average there, because we were sort of just in free fall before that. And then today was sort of the first day of stabilization. But just to further show that point, so if we go back to last year, like when we were crashing during March and April, you could see here that we're free falling here, right? And then you do get these bounces. So like again, bounce right up to the 9-day moving average right there, right? Then what do you see the next day? Completely rejected it and came back down lower. Again, bounce back up to the 9-day moving average, back down into free fall until we eventually started to chop around and reclaim. And yeah, even here towards the end of March, after this crash here, again, we came right up to the 9-day moving average, tapped it exactly, and then broke lower. So that wouldn't surprise me if that's what this is here, especially when you pair that with sort of the ridiculousness of the headlines today. So if you think that we're going to see like an escalation and aren't really buying these headlines, maybe we see a similar thing where we come back down lower below and keep below that 9-day moving average and sort of keep trending downward. And that's sort of my base case scenario. That's what I'm expecting and what I'm playing for. Um, but it is totally possible that yesterday was the bottom. Um, but again, one thing I've been talking about in some of these streams is that normally on a bottom you get a sort of capitulation candle where you see a huge amount of sell volume, right? And I mean, there's a lot of sell volume here, but there hasn't been a day where it's just felt like total capitulation, right? Like it's been pretty orderly so far. There was a lot of days of high volume selling, but nothing that was really like this, like in November. So you got a huge wick here, or going back to last year, you had huge sell volume there, and we just haven't gotten that yet, which again makes me biased that we might go a little bit lower, and maybe this isn't the end of it. Um, so that's what the Nasdaq looks like, and S&P 500 is similar. We came a little bit above the 9-day on the S&P. Um, so ideally, I mean, looking into tomorrow, if you're a bull, you want to see us hold that 9-day moving average on the SPY. So if we could stay above that and then hopefully further bounce into the 21, which is this blue line here, I mean, that's what the bulls are looking for. Like after you're exiting a downtrend, you want to start to see us reclaim these moving averages one at a time. And then the more that you reclaim, typically the more bullish the market becomes, at least technically speaking. See, so like for example, when we broke above the 200-day after the crash in March of last year, so like May we broke above the 200-day finally, like we reclaimed the 200-day, and then we held the 21-day moving average here basically all the way up until October, and then we started to chop around a little bit. But yeah, that's why it's such a concerning sign when you start breaking these moving averages lower, because it just takes time to reclaim them. But obviously today was a huge day for the SPY to reclaim the 9. And then, like I said, bulls want to see us get closer to that 21 and just start to keep reclaiming these moving averages as we go up. But that the flip side of that is we could just reject this 9 and continue lower, and then that's obviously a pretty bearish sign. So yeah, we just got to start holding some of these moving averages to continue higher. I mean, that's what we want to see ultimately. So let's look at oil. So look at crude oil futures. Like we're still really high in oil. So this is a daily chart. I mean, we're still over $100 on those. And that was sort of what was interesting about today, is that despite the market rally, oil didn't really come down. So it's almost like the oil market wasn't really buying this move today. That's sort of how I would interpret it. So let's go to 4 hours. Yeah, so we just didn't really move much on oil today. Like we held these highs pretty much. But yeah, we're still way up here on oil. And this is sort of a recurring theme that I've been talking about. It's like as long as oil stays elevated, that just is going to put pressure on corporate earnings and just like equity markets in general. So the long story short with oil is that fundamentally oil is energy, right? So when energy becomes more expensive, everything becomes more expensive. And this leads to demand destruction. And demand destruction leads to recession or contracting economic activity. So The longer that this goes on and oil stays elevated, that's just going to put pressure on corporate earnings because all of these corporations have to pay for oil and they pay for energy. Everything they pay for that has to be shipped or requires energy just becomes more expensive. And ultimately, that puts pressure on their earnings and revenue, right? So let's look at Meta. So um, Meta was one of the ones that has had some of the worst performance over the last couple of weeks, and it got a huge bounce today. And look at this again. It taps the 9-day moving average perfectly. So we'll have to see if it could break above that and hold it tomorrow, or if it rejects it and continues lower. But we covered this a little bit in the last stream. So you can see Meta's trading at 572 now, right? But let's go into its forecast here. So for 2026, it's projected to have $30 of earnings per share. So $30 of earnings per share puts it at about, what is that, 18, 19, 19 price to earnings ratio. So what that means is you're paying the price of Meta is 19 times 2026 earnings. That's what you're paying for it, right? So let's go out and look at 2029. So in 2029, Meta is projected to earn almost $50 a share in earnings, and that would put it at about 12 PE, so 12 years of forward earnings. 12 years of forward earnings for 2029. And for a company like Meta, you would think that that's cheap, right? But ultimately, where the rubber hits the road on these forecasts and PE ratios is that these are all revenue and earnings projections, right? So if energy becomes more expensive and this fundamentally affects Meta's revenue in the short term or costs in the short term, then you're going to expect to see that reflected in their future earnings. So these projections could be slashed, and will that's what investors are going to be looking for to hear on the earnings call if they can maintain their revenue and EPS projections. But just because something looks cheap now, that doesn't mean that these forward projections are going to hold. In fact, the market's actually pricing in that they won't. And I mean that, so you could argue that that's what the sell-off is. And it's the same story in all these big tech companies. I mean, here's Microsoft. Let's look at a weekly time frame here. I mean, Microsoft has gone all the way down from like 550 to 370. And you would think that, oh, that means Microsoft is cheap, right? Well, not exactly, because if they have to come out and cut their EPS and revenue guidance, then it's just not worth as much as it was worth before on a forward-looking basis. So that's sort of a little bit about how valuation works in terms of forward revenue guidance. Let's see what else we want to cover here. Yeah, so I think the more broadly speaking, it's really just a question of like where we're at now. We've got these higher oil prices, right? Then we've got these super high um, EPS and revenue expectations from specifically the big tech hyperscaler companies, right? And fundamentally, they drive a lot of the performance of the market at this point, like smaller companies that are contracted with them, et cetera. Um, so we'll have to look really closely at this coming earnings season to see if all of these companies hold their, well, first of all, how they performed this past quarter, and then what they look forward to for next quarter and the following years in terms of capital expenditure and also what they expect their own performance to be. But yeah, as long as oil stays elevated, I mean, you would think at some point this has to affect EPS going forward. And even though we got the bounce today um, in equities, we just didn't get oil to back off really. So that is concerning to me, and another reason why I don't think we're totally out of the woods yet. Like, I just don't think the magnitude of this disruption has quite been priced into the market yet. That's sort of my base case and how I'm thinking about it right now. Yeah, so that's probably it for the markets. Not too much to talk about. I mean, we just got a big bounce today. We'll just have to see if we could hold that, or if we just get rejected off of the 9 and continue lower. I think that's going to be the key thing to watch. But the last thing I wanted to cover here was just a little bit about oil. I mean, I'm not an expert. I mean, I've covered it for like a couple years at an old job that I used to have, so I know a little bit. Um, but yeah, I'm not an expert by any means. I'm not trying to make it seem like I am. But I thought this was useful. So I did a lot of research over the last couple days on this, and you can see here, here's the Persian Gulf, right? This is Iran to the north, and then you have a lot of the Gulf states here down to the south. And the Strait of Hormuz is right here. So in blocking the strait, they could control all of the oil coming from inside of the Persian Gulf out into the sea, right? Out into the Arabian Sea. So countries, let me go. So yeah, I posted this yesterday on Twitter. You can see it if you go back through my tweets. But yeah, I just wanted to go over like a breakdown of the Middle East oil routes. So and their production capacity. So Iran has actually increased their production by 5%, and they're obviously sending tankers through the strait. So Iran's able to do that, and they're able to capitalize on these elevated oil prices, right? So they're making an enormous amount of money right now by being able to do that. Oman, you can see here, they're actually okay, and their oil production and exports have remained unchanged because they're able to ship out their oil from the Gulf of Oman without fear of being um, attacked by the strait. So like they're in a really good strategic position here to be able to send their oil out without fear of Iranian attack, or being able to be blockaded through the strait, right? So so Iran and Oman are the two beneficiaries of this situation so far. So then we get into Saudi Arabia over here, right? So Saudi Arabia usually ships most of its oil through the Gulf and through the Strait, but they do have a pipeline that goes from the east part of the country to the west part of the country into the Red Sea. So they've actually rerouted a huge percentage of their oil through that pipeline, and then it's now being picked up in the Red Sea. So all of the tankers that uh, were previously picking up in the Persian Gulf for Saudi Arabian oil, they're now getting it through the Red Sea. So Saudi Arabia has had that's a great option that Saudi Arabia has there to mitigate the risk from Iran. And despite that, though, they're still down about 20% in their total exports as of yesterday. I mean, I don't know how accurate that is, but that's what we came up with, was they're down about 20%. So even Saudi Arabia wants to resolve the situation because they're obviously being negatively affected by it, right? Then we get into some of these Gulf countries, though. So let's get into UAE. So UAE usually ships most of their oil through in this side of the Persian Gulf and then goes through the Strait, but they are able to divert it to um, Fujairah. I don't know how to say it properly, but yeah, they have a pipeline where they're able to divert it to Fujairah, where they can avoid the Strait and also get it out into the Arabian Sea through the Gulf of Oman that way. So they are able to reroute their oil. Um, but then a country like Qatar, which is just totally locked in here, the only waterway they have is the Persian Gulf. They're completely negatively affected by this. So their exports are down 60% and they have no ability to reroute their oil. And it's similar for Bahrain. They're exporting no oil and they have no reroute capability. And then Kuwait, similar story. They're down 80%, and they have no ability to reroute their oil either. Iraq, they normally export the majority of their oil through the Persian Gulf, but they're also unable to do so. So they're down 70%, but they also have the ability to reroute their oil through Turkey. There is a pipeline that does that. And who else? I think that's all of them. But yeah, I just wanted to show you that breakdown so you can sort of get an idea of what's going on. Because like normally you would think that, oh, this is bad for every country in the region. Well, not really. Like there are some that benefit. I mean, Oman is definitely benefiting, and I haven't seen too much of their infrastructure attacked or destroyed. So if they're just exporting the same amount as they were before at higher prices, I mean, they could be benefiting massively from this. Um, and obviously Iran is not really benefiting because they're having so much of their infrastructure destroyed. Um, so we'll just have to see like where they're at after this. But yeah, even Saudi Arabia is kind of interesting because I guess it's plausible that they could be making more money than they were before if they're really only down if they're really only exporting 20% less and then they're able to reroute it through the Red Sea. And then obviously oil prices are up by way more than 20%. So it is feasible that Saudi Arabia is making more money than they were before, but I'm not sure the extent of the infrastructure damage in Saudi Arabia. Um, and then, yeah, this was the last thing. So this is where Karg Island is, and this is where I think 90% of Iran's oil is processed through. So I think it could be feasible that maybe this weekend or next week, maybe the U.S. does move to try to take Karg Island just to threaten it or use it as a bargaining chip, just to show that like we could control, like, because if Iran can't get the revenue from oil, then I mean it's just a matter of time until they run out of money at a certain point. So I mean, yeah, it wouldn't surprise me if we do try to take that maybe this weekend. Um, but yeah, I think that's sort of the breakdown of Middle Eastern oil there. And you can see, I mean, if you look further out, the reason that, I mean, people also say that like the US has no interest in this oil, right? But the reality is that it's a lot of our East Asian partners that depend on this oil. And so the oil comes out of the sea there, and then it just gets, and then it could go all the way into Asia out here. So, and that's where a lot of like the semiconductor companies are located, like the chip fabrication and things like that. And you know, we were even concerned about, and it's not just oil that comes through the strait. One of the concerns is helium. I was reading about that for like a week now, and helium is essential in a number of the semiconductor manufacturing facilities, and I think that's one of the shortages that we have to look for because I haven't heard of that being alleviated yet. And then there's like a certain amount of shelf life that the helium has on these ships. So yeah, I'm paying close attention to see what happens to that because that could be a huge negative for companies like TSMC if there's any issues with that. So again, that's another thing you would be looking like you would expect an analyst to ask about that on the TSMC earnings call and see what they say about that because that's the sort of thing where that like a shortage like that could directly affect their revenue and EPS guidance going forward if they know that they don't have the amount of helium that they need to produce these chips. So yeah, that's sort of the end of the market recap today, and I hope you learned something from the oil breakdown. So yeah, that is it for today. Let's see what happens tomorrow, guys. Have a good one.